Hello to the second part of our series, and we are with Benjamin right now. Hello, Ben. How are you?
Hi, thanks for having me.
So, how is it going?
Everything's going great, the market's blowing up, but at least at Cap we're continuing on. Super excited about Mega ETH's launch.
Yeah, I'm really excited about it too. And before we start, could you please briefly introduce yourself? How did you found Cap Money, and what's your background in this area?
Wow, okay, big intro, big intro. So my name is Benjamin. I'm the founder of Cap. Cap is a platform for insured yield on the dollar, right? Where we allow institutions to make yield for you, but we insure their activities because we want to keep you safe. How did we start Cap? Well, we recognize that right now other options for dollar yield are very, very risky, right? If you're getting T-bill yield, okay, that's not risky, but that's not really a good yield, right? Especially with inflation so high. So a lot of people start going to vaults, hedge fund stable coins, etc. That's super risky. So we decided, okay, we need something um, that's a bit better for retail. That's going to protect them long term. So we stop seeing all these blow ups that we always see on stable coins.
So, I'm also a user of Cap, and I've been farming some
Oh,
PTs from Pendle. So, could you please explain us the difference between CUSD and stake CUSD? And I believe there are three different parties in the platform. So, how it all works?
so CUSD is our digital dollar, which you can mint and redeem with approved assets. So we have a KYC track that you can mint with money market funds, and a non KYC track where you can mint with just USDC. So super simple. It's just like swapping on Uniswap. And then we have stake USD. So if you want to earn yield, you have to stake it, right? And if you don't want to earn yield, if you just want a pegged asset, which a lot of our integrations just want a pegged US dollar asset, then don't stake it. So that's why we have both of them. Currently, most of our users stake them. So around 60% of our users are staking for yield. The other people are earning caps, which is our own type of points under the new program, the Homestead program.
About the stake USD. So, for generating this yield, and I looked at Dune dashboards and I saw some different fluctuations in the staked USD's APIs. So, what causes these differences, and how? Yeah, basically, who gets this yield?
Yeah, so the yield that we get comes from institutions. So a big thing that we changed from other stablecoins is that us as a team, we're not making the yield.
Yeah.
Instead, we onboarded institutions that have never used DeFi like this ever before. We've onboarded them to make yield for you. So these are large firms like Susquehanna, which is 900 billion AUM, like IMC Trading, like Flow Traders. These are not your crypto market makers that borrow already from crypto. These are large institutions that are regulated and that are coming on chain for cap. So they're the ones borrowing your stable coins and generating yield. But before they come to us, we make them get insurance. So we also have an insurance platform at Cap, and all of our institutions that come to generate yield for a dollar have to get insurance in that platform. And so that's the two things that we have.
I guess insuring your funds is a different thing you have, considering the all markets perspective, right?
Yeah, I think well, there's two things that we have, right? One is the insurance because nobody else has native
Mhm.
insurance on all the yield that we're generating. But the other thing is the institutions, right? The
Yeah,
the
definitely.
problem, even if you have a safe stable coin, if you're relying on a team to make yield, eventually they're going to underperform, right? Because if any of these stablecoin teams were good hedge funds, they wouldn't be a stablecoin. They would just start a hedge fund, right? And so if you want to earn yield at any size, you need to tap into the market. You need to tap into the large institutions that know how to generate yield at scale. It's sort of like private credit in a sense, right? Because we're allocating capital to all of these institutions to generate yield on our behalf. But we're better than private credit, right? We're better than Apollo or Wisdom Tree because we are able to fully cover the downside with smart contracts, whereas they rely on legal agreements and people can commit fraud, they can lie. There's all sorts of issues that come with legal agreements.
Yeah, also talking about this stuff, risks, insurances, I want to talk about more about the collateral side. So I know you are currently accepting WTGXX tokenized US money market fund as a collateral. So
Yes.
are you planning to expand your collateral portfolio like this, or what are your plans about your collaterals?
Yeah, so why do we add all these assets as collateral?
Mhm.
It's because we want different users to access our yield, because not everybody's holding USDC, right? You have folks and institutions that are not comfortable with permissionless assets, right? So you have a lot of pension funds that are holding Wisdom Tree's money market fund, BlackRock's, or Franklin Templeton's money market fund, and these guys also want yield. But currently, the institutions that generate those assets, so like JP Morgan, Franklin Templeton, they have not whitelisted any DeFi protocol to use their assets because they think they're unsafe, because they think they're not compliant. And CAP is the first one that gets one of these major institutions to whitelist them. So that was Wisdom Tree. They not only whitelisted our stablecoin, they whitelisted our lending market. And so now, if you're a hedge fund, if you're a family office, if you're a pension fund in Wisdom Tree, you can upgrade your T-bill yield to be cap yield by using your Wisdom Tree deposits. And so we started with Wisdom Tree as a pilot, but we're going to move on to Franklin Templeton, BlackRock, JP Morgan, etc.
That's great. I guess this answers your TVL growth as well, because you are at a relatively new protocol, but currently you are nearly 500 million TVL. So I guess it helped a lot, right?
Yeah, it helps. To be honest, so far the money market usage is low, right?
Mhm.
Because these money markets are new in general.
Yeah.
Our goal there is more to connect to the existing financial system, so that our application is not just some DeFi platform, right? It's a backbone for the future of private credit. In terms of the growth so far, it's been great. Right? Most of our usage is not some weird backroom deals with LPs. It's just us going to family offices and liquid funds and saying, "Hey, we have this product. Do you like it?" And then they like it and they put their money in it. And so it's been very organic, which is not only good for our growth but also good for our token. We're not giving away our token like candy, right? We're not just doing all sorts of deals with our token. And so I hope that means it will do better in the future.
Yeah, I also read your article about your ITO announcements, so I'm really excited, and I was shocked to see just 11% initial supply and 10% is already given away to the community and just 1% to the market makers. It's a very different approach considering the 2025's all TGs and stuff. So I liked it on my half. So
Thank you. Well, here's the thing. Most tokens go to zero,
yeah.
and they go to zero irrespective of how good the project is. You can have an amazing project, but your token still goes to zero. Why? Because you give airdrops to people that don't want your token, and so they just sell it for stable coins. You give your token to centralized exchanges, and they sell your token. And the reality is there's not that much liquidity to buy your token. And so at the end of the day, there's too much sell pressure, and then you go to zero, then you can't incentivize your project anymore, and then your project goes to zero, and it's just bad capital markets hygiene. So what we're doing is completely changing how people see token launches. We're doing something that nobody's ever done before. And what we're doing is we're saying, okay, only the people that have bought the token get the token. So that means we're not paying any money for listings. We're not paying Binance. We're not paying OKX. Nobody's getting any money from us for the listings. And if they don't want to list us, they don't list us. Then for the airdrop, we're giving cash. We're giving CUSD to our points holders instead of the token. And so then at launch, the only people that have the token are going to be the participants of the ICO. And they're all going to have more or less the same cost basis. So there's no this game of chicken of who sells the token first.
That's a great way to approach and innovative approach. I'm curious, and I'm also really curious about its effect on the future. If this choice succeeds, I believe more teams will implement it in the future. So I'm really intrigued about how it will play out, and hopefully, uh, incentivizing and incentivizing different parties in this ICO help you a lot, and I hope we will see a different chart. And talking about the ICO, is there any things or clues you can give us about the CAP's utility, your own token?
Yeah, so there are a few utilities. It's very similar to like ENA, for example,
Mhm.
where you can vote on certain parameters. The differences are, so we're doing buybacks using the funds that we generate from the fees. How much we take as a fee will be something that the token holders will decide. And then finally, once the token is out, and this is something I'm most interested in, once the token is out, we're going to allow for CAP token holders to interact with the protocol with their CAP tokens. And so that will include things like staking your CAP to become an operator. It will be things like perhaps insurance functionalities on top of CAP. So there's certain things that we want to do so that it's not just like a side revenue token, it's actually a network token that participates in the platform.
Okay, so basically there will be buybacks. It will
Yeah.
act as a governance token as well, and it will play out in different networks in the whole system, and
Yeah.
it won't be generally used. Okay, that's a great thing. And also, I mentioned about you are being part of the Mega Mafia, and I guess you are the earliest launch in the Mega Mafia
I mean,
because
we were the first project in the Mega Mafia. So
you
before there was
are.
a mafia, it was Cap, right? Like, because I'm close to Shuya, close to Namek, and they came up to us and asked us, "Hey, do you want to be part of Mega ETH? Do you want to build our stablecoin or yield bearing stablecoin as part of our system?" And I said, "Of course," because I think this is like a great team, and they're doing something that others are not, and so we want to collaborate with them. And not only were we the first in the Mega Mafia, we're also the first in the Mega Mafia to launch. So we've been live for almost 5 months now, and we're already live on Mega ETH mainnet, even though it's closed for now. But whenever it opens, you'll be able to bridge CUSD to Mega ETH and use us in all the applications.
And also, I want to ask another thing about Megait. So we know there is USDM as well. And is there any conflict of interest with USDM and CUSD?
No, I think if you use USDM, why do you use it, right? It's because you want a T-bill backed stablecoin that does
Mhm.
not earn yield. It's sort of how you would use USDC, right? And you put it into different applications and integrate it. Cap is okay. Do you want to earn yield, right? So
Mhm.
if you want to earn yield that is fully insured, then you use Cap, and so then there are completely different use cases.
Definitely. So the use cases will separate different types of users.
Right. One thing I'm super excited about for Mega ETH is looping. So there are a lot of lending markets going live on Mega ETH. Aave, for example, they posted a proposal, the Aave Labs team did, to add stakes USD into Aave on Mega ETH. And as you know, on L2s, the big issue is there's not a lot of borrowing demand usually in
Yeah.
these lending markets. That's usually the bottleneck. And since Cap's yield is higher than Aave's yield, then it should be very nice to loop stakes USD on Aave, plus whatever Mega ETH incentives come. Obviously, I can't say anything about that because that's for Namek and Shuya to announce. But I expect there to be a lot of cool incentives to come.
Yeah, hopefully. I also read some articles on your blog as well, some looping strategies on Morpho with PTs and stuff. So I love you're definitely supporting the type all users in your platform and encouraging them to utilize everything in DeFi. And Megait will be the great place for that too, because I'm really excited about those new other innovative stuff. Like
Right.
you can always take positions on interest rates, all the RWAs. There will be a lot of new stuff. And also at the start, you mentioned about the Homestead program. Your first program, I guess it was named its name was Frontier, right? It's
Yeah.
coming to an end, and after that, I guess there will be an ICO, and after that, the new program Homestead will start. Is
So
this
the
the
Homestead
time?
program starts in 3 days.
Ah, okay.
So maybe a little bit about Frontier program. So we had this program for 5 months, right, where we were giving points to people that used our platform, and now, surprise, we're giving you stable coins. First stablecoin airdrop ever. And I hope that shows everybody that farms that this is the best program to farm, right? Because usually what happens is you buy the YTs, you farm a project, and then you get a token that just goes to zero right after TGE. We are taking that away and we're just giving you what you want, which is cash, right? And so hopefully people that are in the Frontier program are happy with the kind of like the end result of what they just did, and they want to participate in the next program. And for the people that missed out and now are not getting a stablecoin airdrop, maybe try Homestead program. Maybe don't miss out on the second one.
Okay, so there will be a second one.
So I can't tell you anything about Homestead program. All I can say is that we are giving caps just like we did in the first one. And by the way, for the first month of Homestead, we have 2x the points. So for the first 30 days, starting on January 29th, we're going to have double the rate for the initial users.
Okay, so you want to be early on that.
You want to be early. You don't want to miss the first couple of days.
Another question about Turkish market. So, are you planning to expand on different types of fiat currencies or different strategies on Cap Money?
So CAP will expand to more assets. So we already
Mhm.
have some gold delegation coming, as well as some Japanese yen delegations. Essentially, any asset that has a low interest rate is very good for delegation. So Bitcoin has 0% interest rate, so does gold, right? There's no risk-free rate for those assets. So they represent a very good assets for delegations. Turkish lira is not the same. It has pretty high interest rate, and so I don't think it's a good asset for delegation side cap. But we're looking at many different ones, and obviously, if you're a user in Turkey and you have dollars, like you probably have USDT, why do you have USDT, right? You can put it into cap and now you can earn yield because every second that you hold the dollar, you're losing to inflation. Maybe it's not as high as the lira inflation, but it's still inflation, right? It's like around 3-4% a year. So if you're not beating that, you're losing money. So the two things that I want everybody to walk away with is one is that cap has this insurance mechanism, right? We're not like other yield bearing tokens that completely leave you with all the risk of the strategies to make yield, right? We have this native insurance built with smart contracts and not with legal agreements. And then the other part is that you can always mint and redeem cap with stablecoins one-to-one. So if you don't like CUSD, you can always redeem it for USDC. And you don't have to worry about there being liquidity pools. You don't have to worry about the peg because we're one-to-one redeem. So you can feel safe to enter and exit as you please.
That's great. And also, everything is insured. We know that. What is the worst case scenario for any participant in the network except hacks?
So hacks is the only one, right? So we rely on smart contracts to protect users, right? There is no way, economic way, that you lose money on your CUSD unless we get hacked, right? Unless there's a fault in our smart contracts. And so we've done 8 audits so far, and every single quarter we're doing another audit on the entire code base. So we're very serious about security. And then on top of that, we've partnered with Hypernative, which is this platform to track all of the transactions that occur on top of our on top of our smart contracts. And if they detect any hacks coming, they can pause the protocol immediately without asking us. And so we have a lot of layers of security. And then on top of that, we've partnered with OpenCover. So if you go to our website, cap.app/swap, you can purchase insurance on the smart contract. And so if we get hacked, you can sort of be completely protected.
Yeah, and I believe it's a great implementation as well. I hope other DeFi applications
And it's
will
directly on the
implement.
UI. So it's
Yeah,
super easy. You choose how much you want to cover. You choose what you want to cover against DPEG, smart contracts, bridge, etc. And now Mega ETH is going live soon, and so we're partnering with Layer Zero to bridge our assets to Mega ETH, and so you will be able to get insurance on Layer Zero. So in case you bridge to Mega and then Layer Zero gets hacked, you'll be fully covered if you get that insurance.
hopefully Mega 8 launches soon and we will have more opportunities to try what Cap offers in any way.
Yeah, Mega ETH is launching soon, and it's gonna be great.
I'm also invested in Mega 8, so it should be great.
Same, same. Don't worry, we're in the same boat. But it's fast, man. I've tried the chain. All I can tell you is that it's very fast.
That's cool. I'm also trying on the new stress test, and I feel I like the experience.
Amazing.
So one last thing. in 2026, what are your main goals for CAP, like a TVL target or something like that?
For us, it's all about onboarding more institutions,
Mhm.
right? We want to see anybody that's borrowing from TradFi private credit. So if you're borrowing from Apollo, if you're borrowing from Wisdom Tree, we want you to stop borrowing from them and to switch to borrowing on chain, because we think the future of capital markets is on chain, and it goes beyond just launching tokens. It goes beyond just tokenizing assets on chain. We think that smart contracts can actually be the backbone of capital markets. So that's our big goal for the year.
That's great to hear because in our own video series in our YouTube channel, we always talk about traditional finance combining with decentralized finance, and it's a great way to showcase how the future of DeFi will evolve because you are a great application. Like if you look at the statistics, you are growing very fast, and an application's founder is telling us their main goal is to implement as many as traditional institutions into DeFi, and you will onboard so many different types of investors, and you will open up the gates for traditional finance getting into the Mega ETH and Ethereum ecosystem itself.
Exactly. I mean, that's the goal. We want to sort of do a reverse, right? Right now, most people or most institutions that are coming on chain are being used by DeFi. So it's usually a stablecoin protocol adding an RWA asset as collateral, or a lending market adding a RWA asset as collateral, or using on and off ramping from a TradFi institution. It's never really the TradFi institution using the DeFi protocol. It's never the other way around. And so we're flipping it, right? We're not using TradFi. TradFi is using CAP. And I think that's really the change that we're bringing.
That's great. And also, I have no questions left. So thanks for joining us, Ben. It was a very fast podcast and it was very informative. So thanks
Thank
for
you
the
for
talk.
having me.
Okay.
And thank
Hope
you
to
to
see
all
you.
the Turkish users that we have, because we have a lot of you guys. I see you on the Telegram. I see you on Twitter. Big love for Turkey, and hope to see you guys there soon.
Hopefully. See ya.